Welcome to our channel, and more importantly, welcome to another educational episode. In this episode, we will be taking a look at one of the top performing stocks of 2020 in Tesla Incorporated. Everything I will be discussing in this video is a function of my own opinion based on the research and analysis I have done in analyzing this stock. Stick around to the end of this video and remember to drop a thumbs up on the video and subscribe to our channel if you like the content. Also remember to turn on your channel notifications so you are notified every time we upload a video. Follow us on social media to keep up with our educational content and so you never miss any important market news. All the important links to our channels are in the description below. So let's get right into it. Now we have quite a lot of information to cover regarding Tesla's stock, so what I've done is broken this video down into two parts. I'm going to be uploading part 1 today and I'm going to be uploading part 2 tomorrow, just so that the video length isn't too long and we've segregated the two major parts regarding analyzing Tesla. So in part 1, this video, we're going to be discussing Tesla's business model, as well as discussing why Tesla's had such record stock growth, as well as we're going to be going through their financial statements. Now let's get this show started. Now there's no denying Tesla is at the top of the food chain when it comes to electric vehicle manufacturing, because Tesla is currently the largest electric car manufacturer in the world with around 18% of the global market share of plug-in electric vehicles as of June of this year. That's around 3 times higher than its next competitor, Volkswagen, who has about a 6% market share of EV manufacturing. So with that being said, Tesla currently produces 4 electric vehicle models, and that is the Model S, the Model 3, the Model X, and the Model Y. And they are also developing other models, namely the Roadster, and they are even venturing out into the pickup truck market with their new Cybertruck. And they are also entering the cargo transportation industry with their new Tesla Semi. So Tesla's product line is quite diverse and innovative. And if that isn't impressive enough as it is, Tesla is aiming to be the first company to have a fully functional, legal, self-driving car, using their already existing autopilot feature. Now, on top of making electric cars, Tesla is also looking at a sustainable future for the planet. So they've invested heavily in solar technology with their acquisition of Solar City. So what they're looking at is being able to provide energy solutions from a renewable standpoint in order to charge their vehicles and run their plants. So Tesla's vision is to have their customers be able to charge their cars using solar energy that they're able to provide with their solar panels. So all in all, Tesla makes money by selling their products to customers. So in order to continue to grow their revenues as well as their profits, they need to continue to expand their product range as well as expand their production capacity, which is something that Tesla is doing right now. Furthermore, Tesla has invested a lot of money into making sure that they bring down their cost of manufacturing in order to increase their profit margins so they can continue to sustain high profit levels as they expand. Now that we've covered Tesla's business model, let's move on to talk about Tesla's rapid stock growth over the past year. Now, unless you've been living under a rock, then you're probably fully aware of the amazing gains that Tesla has given back to its investors this year. At the end of last year, on December 31st, Tesla had a market cap, meaning a company value of around $75.7 billion. Now, fast forward to present day, and Tesla is now valued at a whopping $627 billion, which represents around a 750% gain in the value of the company year to date. Now this is very unprecedented gains, so what we're going to try and do in this video is try and justify why Tesla has seen such amazing gains within the past year. As well as we're going to try and determine if there's any fuel left in this Tesla rocket. Now the first and primary reason for its tremendous stock growth is the fact that Tesla has either met or exceeded its delivery targets every quarter for the past 4 quarters. So this shows that there's a continued and increasing demand for their vehicles, coupled with the fact that they've recently opened a new factory in Shanghai, China, and this will allow them to start serving one of the largest EV markets in the Asia Pacific region. So combined with the fact that their deliveries continuously are going upwards, and the fact that they've opened a new factory, as well as the fact that they plan to open 2 more factories to further increase production shows that Tesla's delivery futures are looking quite bright. Tesla has also continually grown their deliveries year over year, and in 2020, this year, they are currently on track to deliver more cars in 1 year than they ever have before, with a goal of delivering around 500,000 vehicles by the end of this year. So despite the situation that's going on in the world, Tesla has still had quite a tremendous year in terms of their car sales and their car deliveries. Now the second reason stems from the heartbeat of all electric vehicles, their battery pack. Now it doesn't take a rocket scientist to realize that this critical part is the most expensive part of an electric vehicle. It's estimated that the battery pack of every Tesla is worth around $10,000 to $12,000, hence the reason for such a high purchase price for their vehicles. As a result of this, Tesla has embarked on the journey to start manufacturing their own batteries with hopes of reducing the production cost by around 56%. So this will in turn allow them to offer cheaper cars, which will allow them to penetrate the market better and allow them to compete even better with their gas guzzling rivals. And sticking on the product of cost, an electric car is on average around $19,000 higher than an average gasoline powered vehicle in the same class. So by lowering this barrier to entry, this will make Teslas and electric vehicles as a whole a lot more affordable to your average customer, because this is clearly the primary barrier to entry to owning an electric vehicle. So Tesla is actively trying to solve this problem and make electric vehicles accessible to everybody. And they've clearly been having success in this arena because their new Model 3 and Model Y have low starting prices in comparison to their older models. To put this into perspective, their Model 3 has a comparable base price to their gas guzzling competitors, and so as a result, this is a huge positive that investors are taking away about Tesla going forward, because now they have a vehicle with a low starting price that can easily compete with other vehicles in their respective classes. The only thing is that Tesla hasn't completely solved this issue yet, because even though they have a low base price for their Model 3, they've had to compromise the performance and range of this model in order to bring the entry price down. So as a result, customers aren't getting the same bang for their buck that they would get with its other competitors. As you see here in this comparison chart, the other two variants of the Model 3 are substantially more expensive than the base model. It simply exists just to have a low price tag, so improving their battery margins is definitely going to aid them in bringing these higher performance, better quality vehicles down into an acceptable price range. And the third and final reason for Tesla's tremendous stock growth that I'm going to cover in this video is down to Elon Musk, Tesla's founder. Now this guy is a borderline genius. I mean, he has plans on inhabiting Mars one day. So if that doesn't get you amped up about his vision for the company and what he wants to achieve, I don't know what will. I mean, Elon has founded multiple companies, including SpaceX. He even founded PayPal and the Boring Company. And so with his expertise and his knowledge and his vision, there's no doubt that investors are extremely confident on the future prospects of Tesla because of the direction that he wants to go with the company. Now, of course, there are tons more reasons why Tesla has seen such tremendous price growth in the past year, but I've just mentioned my top 3 in the interest of time. Now moving on to the third and final section of this part 1 video in my Tesla series, we're going to be taking a look at the financial statements that Tesla has submitted to the SEC over the past couple of years. So taking a look at the annual income statement submitted in 2019, we can see that over the past few years, Tesla has seen clear and consistent revenue growth, meaning that they're selling more vehicles, and this is definitely a positive takeaway from their income statement. The only real problem that I've noted on this statement is the fact that they've continuously posted a net loss every single year since their inception. But on a good note, these losses have been getting smaller and smaller year on year, and as you'll see when we get further along in this section of the video, they're actually on track to post their first annual profit ever in 2020. Now, we was just looking at the income statement related to the last annual report that they submitted, but what I've done is gotten the most recent information and looked at the last Q3 earnings report that they submitted to the SEC. So as we can see here, in comparison to last year, year to date, as of September 30th, Tesla has done around $3.5 billion more in sales than they did at this point last year, which is the huge takeaway from this Q3 earnings report. Furthermore, they posted a net loss at this time last year. However, as of this year, they have posted actually a $566 million profit. So like I said earlier, they're on track to post their first annual profit as long as they continue to keep up these margins. Moving across to the balance sheet, we can clearly see that Tesla has seriously increased the amount of assets that they have on hand by around $10 billion worth or so. And most of this has been attributed to the fact that they've increased their cash position, which is always a good thing to see from any company, is that you want to make sure that they have a lot of cash in hand, because it shows that the company is extremely liquid, and if any emergency payments come up, they're able to handle them. Furthermore, we can also see that their liabilities haven't increased substantially given the fact that they've increased their assets by so much. So the amount of debt that they've had to take on in order to grow their operations hasn't increased a lot, and that's the huge takeaway from the balance sheet that we've seen. Furthermore, they have benefited substantially from the massive increase of their stock price, as they've been able to issue more stock and therefore take on more money without taking on a lot more debt. Now moving over to the cash flow statement, there's definitely a lot to cover. In comparison to the first 9 months of 2019, in 2020, during the same period, Tesla has been able to generate a lot more cash. And this is primarily due to their major increase in revenues, as well as the fact that the company is posting a net profit. So definitely that's a massive positive for the company, and is one of the primary reasons why investors are so bullish on the company. Continuing on that positive theme, we can see that Tesla has seriously invested some money into expanding their operations. And most of that has been the purchase of new equipment, which is attributed to building their new factories and also putting down payments on the 2 additional factories that they will be building within the next 2 to 3 years. Now looking at the financing activities section of the cash flow statement, we can also see that Tesla has been able to take full advantage of their massive stock gain by issuing more stock and raising more capital without having to take on any substantial amount of new debt. Furthermore, we can see that Tesla has done quite a good job at paying off their current debts, and overall their debt position has changed quite insignificantly, even though they have expanded their operations substantially this year. So overall, Tesla is an A+ company when it comes to their financial situation, and a lot of investors who look at these financial statements have realized this, hence why they're valuing the stock price so high. In addition to that, things can only really get better, because based upon this high stock price, Tesla is going to be able to continue to raise capital to expand their operations, because investors are so optimistic about the company. But as you'll see in part 2 of my Tesla breakdown, we're going to be doing a comparison of Tesla's financials with the financials of some of its major competitors. And all importantly, we're going to be trying to find exactly what Tesla's intrinsic value is at this current point in time. And after we do that, we're then going to be making our future predictions on Tesla as a company to see exactly what Tesla's future looks like from both a company perspective in terms of growing their revenue and from a stock price perspective. And with that being said, this brings us to the end of part 1 of a 2-part series covering Tesla. Thank you to all who took the time out to watch this video, and an even bigger thank you to those who made it to the end of this video. I release at least one of these educational videos on the channel per week, in addition to our weekly market breakdown released every Sunday. Remember to turn on your channel notifications so when I upload part 2 in this series tomorrow, you are notified. Also, if you found this video useful, support us by dropping a like on the video so that the YouTube algorithm helps us reach more people. Thanks, and peace out.